Today, I wanted to share with you the three things that make your financial records the tightest, most solid that they can be. The first one is they need to stand on their own. What do I mean by that? Well, when you have a financial transaction, whether it's a payment or a deposit, you want to have the supporting documentation to go with it. That's first of all, in the case of an expense, you want a good receipt. A receipt that doesn't just show the total spent, but you want it to include what it was used to purchase or what period and types of services were delivered for that payment. So you want a really good receipt. The second thing in that area is you want good documentation that answers the who, what, where, and why. For example, say that you have a meal that's purchased. You want a receipt that is detailed and it expresses who was in attendance, where did they meet, that's by evidence of purchase place, what was the purpose of that meeting, so what was the why, was this to plan an event, was this to build a leadership, train someone that you're developing in a leadership role. You want to document the purpose for that. So that's number one, that they need to stand on their own. The second thing is you want for financial transactions, financial records to integrate into your accounting software. Use of digital tools is a must in this day and age. Most accounting softwares will allow you to attach, and we'll just continue that same example of a meal receipt. Say you have either a credit card charge, or you can have it in the form of a reimbursement to an employee, or just a check that's being cut to a restaurant, maybe for catering. In that case, however that transaction is coming into your accounting software, you should be able to attach that receipt and the explanations we just discussed to that transaction. You definitely want to do that. You want to integrate your accounting records digitally into your accounting software. Number three, solid accounting records, solid financial records, code things to the categories they closely relate to. What I mean by that is that if you have a purchase that is for meals, you want to have a line item that is for meals. Or in the case of if you're planning for an event, maybe you would charge that to your event cost. In either case, you don't want it to be charged to office supplies because, well, there's still budget over there. That's normally the motivation for charging things to the wrong account. You really want to make sure the accounting records do not fall into that trap. You want to make sure expenses are coded to the account that best reflects their purpose. The reason for this is because it will turn around and be a very valuable tool when you're reflecting on what it really takes to deliver those services, that ministry, that mission, and also in the planning process for the future budget years. So you might need to be flexible throughout the year to create an account or to split something into two categories. Just as things are changing and ebbing and flowing in your nonprofit, you may need to make those adjustments throughout the year. So there you go. Those are my top three things for making solid financial records. Here's the deal. People come and people sometimes go. And if the accounting records are solid, you should be able to search, you should be able to see, you should be able to use that history in a way that is strategically available to help you plan for and look towards the future.